Hi there traders, welcome back to the channel. If you are serious about making smart stock investment and want to maximize your gains, then this video is for you. Today we're diving deep into how to analyze a stock before buying, because when you buy blindly, you risk losing it all. Let's learn the steps to analyze a stock and make informed decisions to grow your portfolio. But before we get started, don't forget to smash that like button and subscribe to the channel for more trading strategies. It really helps us out and keeps you updated with the latest content. Let's jump right in. When you are looking to buy stock, the first things to consider is the company's business model. This simply means, how does the company make money? Either through product sales, services, or a combination of both. You need to have a clear idea of the company's core operations and whether those operations are in demand now and will be in the future. For instance, if you're looking at a tech company like Apple, its revenue primarily comes from hardware sales, iPhones, iPads, and Macs, but also increasingly from services like iCloud and the App Store. Understanding this can help you gauge future growth potential. Next up, we are talking numbers. This is where the financial statements come into play. You will want to check the income statement, balance sheet, and cash flow statement. Here is an example. Key metrics. Revenue growth. Is the company's revenue growing year over year? Consistent revenue growth often points to a strong business. Profit margins. Are they improving their profit margins or are they shrinking? Look for companies with growing profit margins. It shows they are managing costs well. Debt levels. A company with too much debt may struggle during economic downturns. You will want to compare their debt to equity ratio to see if it's manageable. If we look at a company like Tesla, its revenue has been growing, but it also has significant capital expenses. It's essential to weigh these numbers to see if the investment makes sense for your portfolio. Stocks don't exist in a vacuum. They operate within industries, and it's crucial to know how the company stacks up against its competitors. Is the industry growing? Is the company gaining market share? Take the e-commerce industry. For example, Amazon dominates. But if you're analyzing other companies like Shopify, you will want to see how they compare in terms of user growth, market presence, and innovation. Don't just look at the company, evaluate the entire industry to get a complete picture. If the industry is growing, that could spell good news for the stock you are eyeing. Quick break here. If you're enjoying these insights and want even more advanced strategies on analyzing stocks and growing your portfolio, make sure to join our Telegram community. We share exclusive tips and in-depth stock analysis you won't find anywhere else. The link is in the description below, so don't miss out. Now we move to valuation. Just because a company looks great on paper doesn't mean its stocks is a good buy right now. You need to check if it's fairly priced by looking at key valuation ratios. Key ratios explained in simple terms. PA ratio, price to earnings. This tells you how much people are willing to pay for each dollar a company earns. If you compare this number to other companies in the same industry, you can figure out if the stock is too expensive or cheap. PB ratio, price to book. This ratio shows if a stock price is higher or lower than the value of the company's actual assets. A low PB could mean the stock is a virgin, but it might also mean the company is facing problems. PG ratio. This looks at how fast the company is expected to grow. A low PG ratio can be a sign that the stock is a good deal, as it suggests the stock price is low compared to the company's future earnings potential. If you're analyzing a tech stock like Nvidia, you will notice it may have a high PE ratio, but if its growth is substantial, it might still be worth the investment. Finally, don't forget to check the stock's price history. How have the stock performed over the last few months or years? Is it currently in an uptrend or downtrend? These patterns can give you insight into potential price movements. Let's take Microsoft as an example. If you look at its price range over the last few years, it's been steadily climbing, especially during key product launches or earnings reports. This historical performance can provide clues on when might be a good time to buy. And there you have it, 5 essential steps to analyzing a stock before buying. Remember, the more informed you are, the smarter your investment will be. If you found value in this video, please make sure to give it a thumbs up, hit the subscribe button, and watch my next videos. They will be really useful for you. Also, don't forget, join our Telegram community for exclusive content that will help you stay ahead of the market. The link is down below. Thanks for watching, and I will see you in the next video.